by BBURRELL. As you guys can hear the music part in the background, but I want to come to you guys tonight on a trading tip. Some of you guys know me from different parts of the world, different careers and crossing paths, but tonight I usually teach on Mondays, just a little bit of Data and Kiki. This call will be going until I finish the academy. Majority of that is actually complete. I just have to create all the assignments, et cetera, et cetera. So not to talk y'all head off, super grateful to be here on tonight. If you're in the signals chat and you've been securing the bag, drop some fire, some flames, some bags in the chat box. Super grateful that the markets, ooh, let's go TP. We about to smash take profit too. Let's go. Let me go ahead and share my screen. We about to smash take profit too. Let's go, let's go, let's go, let's go, let's go, let's go. Come on, red line. So for those of y'all who don't know, just because I go into it real quick, there's two lines on the chart. There's a red box and a blue box at the bottom, and that's called the spread. If on a sale and you're selling the trade, the red box has to cross over your TP line for the trade to close out. So sometimes you'll notice that the market is right there where your trade is supposed to close, but for some reason it's not closing. And that is because, how do you move this? Can y'all see this? That is because this red line has to cross over the TP target. So when you put in there for the trade to close out automatically, and you put that setting in there for a take profit, you don't have to put a take profit in there, but if you do, the red line has to cross over that line for it to close out automatically. If you're doing a buy, then it's inverse. The blue box has to cross on the upside. So that's just a little nugget for you guys. So we still at AU, man. We've been riding this thing for a week. As you guys can see, I'm just holding entries for marketing purposes. But these are our entries last week for those who are in the signals chat. These are my two personal entries, but these are the two initial ones you guys took in the signals group. And then this is the one we're in right now. Mondays, the markets are a little bit slower. So that's why I've been sitting there all day. And overnight, you start seeing momentum pop off and things begin to start moving around. So thank you guys for participating in the chat. I mean, in the app. And I hope everything is going well. If you have any concerns, please don't hesitate to reach out to me and let me know. And read the welcome message. All right, cool. So does anybody have any questions, concerns, testimonials, ideas, or feedback for me as I go into this training? Any questions or concerns? I hope y'all seeing that this technique does work and it's very, very simple. And my goal is to remove the notion that you have to be a super nerd or super degreed to do this skill and to make some money in these markets. So masterclass. Johnny, did you bring that to me last time? And then I said I was gonna do one. Okay. I'm thinking the end of June. I mean, hold on, April. Was it end of June? End of June. Yeah, end of June. Because I'm busy for these next 90 days. So I was thinking the end of June. I have a wedding June 20th, and I have my birthday's the end of May. And I just want to give people time to get registered for the class. So like, yeah, it's about 2.5 months. End of June, is that too far? Or y'all want it sooner? In the June, it's $350 for a 2-day class. Just so y'all know, I usually charge $300 an hour for one-on-ones, but the master class is to compress a lot of what I know in a day and a half so that people who don't want to pay for a one-on-one, they can do the class. I am a child of God, Mel. All right, any trading questions? Y'all asked me about the master class. So I'm thinking the end of June, y'all let me know. Okay, yeah, end of June, the last weekend of June, the 24th to 25th. That's the dates I'm looking at, just a heads up. Right after I come back from Puerto Rico. Does anybody have any questions about trading? Any questions about trading? Entries, stop loss, targets, take profits. What is it? Stop profits, entries. All right, bet. Jay, hit me up tomorrow, man. Yeah, let me know when you're free tomorrow, bro. After 12. Okay, cool. Well, let's get over here to it so y'all figure out what to ask. All right. So with trading, guys, with the DAEDAEKEYKEY technique, there's not something that, can you do some back testing? You gotta be more specific about that question. Oh, we just smashed take profit too. Let's go. With this thing, get out the way. I'm sorry, y'all. This Zoom added the feature with a. Let's go. We just smashed TP2 on AUD. This is the first target. This is the second. And let's go. And these are other positions I'm still holding. AUD Swiss got away. It never did come back up. That thing shot down as soon as I sent the signal out. So that was more of a sniper entry. It did not give me a pullback for a retest. So I have those using the signals chat. You can delete that trade. As you can see, it was the right prediction, but price never came back. It just dropped and then pulled back all the way down here. So it would have crossed all of our targets if price would have gave us one more retest. So that would have been 2-0 today, but that's okay. All right. If you're still holding AUD USD, you're deep in the bag. From last week, you're up 100. Shoot, what? It was 80, 89. You're up almost 200 pips, actually. All right, good deal. So let's go into some teaching, guys. So one thing that I do, one thing about this particular training, it's a very light training because the trading is easy, but then there's a lot of repetition that goes into it. A lot of people are looking for different indicators and different strategies to secure the bag, but are you guys believing more how simple trading is? If you guys are following me in the DAEDAEKEYKEY, well, those with the signals, you guys are seeing my overview. So are you guys seeing how simple it is? Where I'm saying just set and forget, place the trade, and I help you guys to develop that confidence by emulating what I'm doing. When practicing is it best to trade one pair, it doesn't matter. So everything that you're going to do is thank you for asking the question, Johnny. Okay, so let's go with your question, and I'm gonna go into the technicals. So he asks, is the best to trade one pair, or it doesn't matter? It doesn't matter. It depends on, Johnny just left the call. He's still in the call? Okay, he'll come back. When he come back. All right. So, oh, you're here. It said you left the call. Okay. So it depends on you. It's not a personal preference. You'll see a lot of positions that I'm in because I'm sending signals and I'm doing my own trades. And I also will execute small positions because those are positions that I'm watching. So if you ever seen like all these little 10 cents, I either pulled all my profits out of those positions, or those are trades that I'm monitoring, waiting for pullback. So I'll see that it's back. If it goes downward like $2 or $3, most likely has come back to an entry point that I've been waiting on. So it's my little unique way of following trades that I'm watching. But it's always your personal preference. I tell people your trading should always be based off of your account, your capital, and your risk management. So whether you got 6 positions in AU or 1 big position in GU, it doesn't matter. You just have to make sure it doesn't exceed what your risk management says. For those of you who don't know, you can leverage what they call trading proprietary firms. So I've started to leverage more of my capital that way. So I'm not trading all my money anymore. So a trading proprietary firm, I shared this on one of the previous calls, is basically a company that you can join. Some of them you have to pass an evaluation, but you have to prove to them that you can trade. You have to prove to them that you're good with risk management, and they'll give you access anywhere between $2,000 to $50,000 worth of capital. And once that capital grows a certain percentage, they'll double your account. Sometimes they'll 2x your account. Okay. I mean, 1x and 2x your account. So for instance, $50,000 portfolio. Once it grows to 10%, they'll give me access to a $100,000 portfolio. Once it grows 10%, they gave me access to a $200,000 portfolio. So that's just to give you guys an example of growth. But the thing about those trading proprietary firms, guys, is you can't over leverage. You really can't leverage no more than over like 0.5%. So meaning, usually I tell people $10 per 10 grand. You can't even do that. You need to be doing like $1 per 10 grand. Because once you go down 5%, they suspend the account. You can start as many accounts as you want to, but that's just something I've been telling a lot of, just people who I know are really better at trading and doing better at money management. Do your own research. It's called trading proprietary firms, and they pretty much have the same thing. 2 of them I know of is E8 and My Forex Funds, but you could pay like $500 and get like a $10,000 account. One of them you can pay $300 to get the $50,000 account, but you have to pass, some of them have to pass evaluations. So the evaluation is the account doesn't go down 5%, and you have to grow the account either 8% in month 1 and 5% in month 2. So that's what I've been doing, because that's skyrocketed me all the way to a 7-figure portfolio way faster than I would do it with compounding. So it's basically like 100x times what I would do it with compounding. So I hope that makes sense. Again, do your own research, read your own, read. I'm not here to give recommendations. I'm just here to tell you guys that's what you can leverage. They'll let you know, the stats they pay out. I've been getting paid. So that's just something you guys can leverage. So Johnny, as you were saying, what do I trade? It's all about what your account size can handle, man. It doesn't matter. The pairs don't even matter. It's just, what can my account handle? Can I place 2 trades? Can I place 3 trades? It doesn't matter about how many trades you're placing. It's about what do they equal to? So if you got 2 positions open, are you supposed to, if you're not supposed to exceed $10, then trade 1 trade, or trade 10 trades at $1, or trade 1 trade at $10. Like, does that make sense? You just have to know what you're not supposed to exceed as far as your risk management goes. So just because you have more capital doesn't mean over leverage or more. It doesn't mean go crazy on your lot size. Like $100,000 portfolio or $500,000 portfolio, I am not trading nowhere near what I would prefer to trade, right? Like $100,000 account, maybe a standard. That's about as far as that goes, right? But the reason I can place as many more positions, because as you guys can see, a lot of my trades are, once they go into profit, I'm risk-free trading. So I can open up as many lot sizes, as many standards as I want to, because they're in profit, they're risk-free. It doesn't matter if it turns around, I've secured the bag and I pulled my partial profits. So if you want to start opening new positions, make sure your first position or that current position is in profit and it's risk-free. Then you can go out there and start opening new positions so you can, get the bag. Does that make sense? It's all about risk management in your trading plan. Perfect. Anybody else have any questions? Okay, perfect. So you guys hear me talk about risk to reward a lot? Yeah, absolutely. Get it to a risk-free. That's perfect. Perfect, Jag. Yeah, get it risk-free and then open more positions. All right. So it's not just something I just saw. So you guys hear me talk about risk-free trading a lot, risk to reward a lot. So for instance, all these trades, they're all risk-free trades. I can go open up, all of these are risk-frees. This one I already secured partials. That's 200 pips up. I wanted to send this out and I'm so glad I didn't, because this thing had some news or something come out and it spiked about 40 pips. So I'm glad I didn't send that. But yeah, all these are risk-free trades, guys. So yeah. So let's see. All right. So anybody have any other questions before I get into the technicals? Oh, another nugget for prop firm. People want to go into prop firms. It's called trading proprietary firms. Is one thing that my goal, my technique that I'm kind of recreating it, is that I'm actually pulling less profits and leaving my profits for more leverage. Because remember, once the account goes down 5%, you're done. You're going to suspend your account. So a lot of time, what I'm doing is actually leaving my profits in there, most of my profits in there, to help me with more leverage, so I could place higher lots, but also it'll push me towards my phases. They give you phases to skip through. So I got you. Give you phases to skip through. So once I grow my account this percentage, they double my account balance, right? So they'll give you all the capital in the world to trade with, as long as you're on your risk management and you just grow it. You don't have to, and you can always, if you don't grow it at a certain percentage to scale it, they'll still give you your profits if you grew the account at whatever amount. All right. So that's just so you guys can know that. All right. So they do 80-20 splits and 50-50 splits. Okay. Let's see some questions. All right. So I'm okay. Wait a minute. Sometimes I see your signals. I check my levels, hesitating, taking trades, but yours always go through. Can you talk about support resistance? Always go through your analysis. When I see your signals, I check my levels and hesitate taking the trades, but you're always, can you give me an example, Ms. Fatu? Can you give me an example? Is there one open right now, or one you're seeing, or one you can bring up? The current one? You can unmute your line to talk to me if you can.
Okay, can you hear me?
Yes, ma'am.
Okay, perfect. How you doing, B? I missed you.
Up,
Okay,
lady.
so I have a level at, let me see if I can give you the coordinates, 74, 213.
Give me the first four. 74, 23.
Like that. Oh, hold on.
You see my screen? I'm sharing my screen.
Hold on. Yes, I see it. Okay.
All right.
So I was on TradingView actually while you're on your phone. Okay, so I had a support level there. So when you sent it,
which level? 74 what?
So I put it in the chat, 74 213 to 74 079.
The 74 079?
Mm-hmm.
Oh, you're down here. You're like, you said 74 0.
Wait, is that even possible?
Yeah, this just happened. These three counters just happened. So if I go to, let's go over here. Okay, this ain't moving. There we go. Okay, so this was the before shot. Can you see my screen?
Uh-huh. Okay,
so that was this morning. The thing took all day, but that's fine. That's what's, that's what the markets do. So that is at 74, 26, and 21. So it was at 268 about right here. And then where it's at now. The bottom one was 2. Lord. Hold on, this app moving slow as a devil. 2-1, probably 2-1-3. All right, 213. All right, where is it? Okay. So I couldn't send out a 1 hour frame because on the picture, because it wouldn't get all my targets when I did the 1 hour. So I had to go up to a 4 hour frame to get all the screenshot of the take profits in there. But when I got on here this morning, I want to say it had, let me just count backwards. 9, 8, 7, 6, 5, 4, 3, 2, 1, 12, 11, 10. So I think it's around 9. So this is the only candle that was there. I set sell execution right here because that's what the market was when I sent the trade out.
Wait, you're not showing your screen right now.
Oh, it just wait a minute. I didn't redo it. All right, can you see it now?
Mm-hmm.
So now what's your question?
So basically I had a support level there
this is
based off of
this is the structure that was there this morning. This is all that you can see.
Uh-huh.
This morning. All right.
Okay. So I had a support level there. It's resistance level, really. Like if you go back March 20th of this, 2022. So I was like, well, it's a resistance there. Maybe it's gonna bounce or like not sell, but then it went through. Huh?
You went to the left?
Yeah.
Yeah, that's a whole confirmation. That's telling me it's gonna sell. Those levels are respecting that level as a sale.
Okay.
Yeah, this is selling. This here and sold. This here and sold. You go back some more. What it do right there? On the 7th it sold. Double on the 9th of November 9th of 2021 it sold. So, So what's your question?
No, you just confirmed it. So basically I see it as a resistance and it's gonna respect the resistance instead of break the resistance. But like you're saying there, it sells.
Yeah, so all I do is just look for boxes, breaks outs, and retests. So the market, I always trade with the trend. So it's clearly trending. We've been in this thing since the 6th, I think. So it's clearly been selling. I didn't send these out because this is what I call my instinct entries, which is, so when I teach Data and Kiki, I typically teach this one right here. Let me show you. Because the instinct technique is a whole nother level. So what I usually teach is this. You got a consolidation. The consolidation can be in different variations. It could be in pennants. If you take a master class, you know that. So it has different ways that it can consolidate. But ultimately, we're waiting for price to leave this box. You know, consolidation ain't nothing but a sandwich. So whether you put it in the blue box or just 2 levels, this is the consolidation. We're waiting for Day to leave the house. Once Day leaves, he's just gonna knock. So this is usually what I teach is the immediate break and retest. All right, that structure left and came back and connected with this, had a conversation with this last moment. Day left the house, knocked on the door, and left again. Right. So this one, I would just move here. Starts getting choppy. This is Sunday. Markets are opening up. But I did see a pattern where this was the new level of consolidation for me in my eyes. Like it could be different for somebody else. That doesn't mean that they're wrong. All right. So you got another sandwich. I'm about to put all these lines back on there later. So you got another, let me move this one. So you got another sandwich, whether you're adhering to the blue box or whether you're adhering to the blue lines. Now, typically I don't have all that on here. I just know that this is consolidation. I'm waiting for something to break out. And that's what it did this morning. When this counter broke below, I was, oh yeah, it's time to get the bag. Now, I ain't gonna lie to y'all. When that counter broke, I was like, Lord, please don't let this thing give me another one of these. I didn't want it to come back up here and retest the last high and sell again. So I was praying like, Lord, because my confirmation is always a breakout. So I was like, let me just think of my confirmation. Counter broke out. I wanted y'all to get in right here at the blue level, but price, I felt like price was about to take off. So I said, well, let's just go ahead and execute right here where we at. It's only a 3 pip difference. So this is what we did, a sell execution. Y'all was in a drawdown, 2 to 3 pips at a time, just bouncing in and out. Oh, wait a minute. So price is just bouncing in and out. And then it finally just broke right here. So we've been sitting here all day, right? But support, they left the house, knock, 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 and leave. So it's always the same thing. So if you're looking at, if you're back testing, if you're using history, you're not, you always want to use history in correlation to the trend. So when price was on this blue level last time, did it sell? That's all I would ask myself. I wouldn't, did it sell? I wouldn't ask, did it buy? Because I'm going for a sale. If I'm in a downtrend, I'm looking for sales history. I'm looking for, and if I'm correlating with buy history, then the only reason I'm correlating with buy history is that it did this. It broke above and retested on my entry zone. But I'm not looking at it in that demeanor. I'm looking at it, oh, it sold in that zone last time. It sold in that zone last time. All right. Oh, it sold in that zone. I was like, oh, heck yeah, I'm about to go for that. All right. If you go out to the 4-hour frame, price sold on March 9th. Price sold on November. Price, you see all them sales on that level? So
yep.
Yeah, I'm only looking for sales because I'm in a downtrend. My daily is down. It's a downtrend. My 4 hours is a downtrend. My 1 hour is giving me hella daily data and Kiki entries and instinct entries. And so I'm just waiting for the next setup. So that's literally all it is.
Yeah, that makes a lot of sense. Sheesh, thank you.
Perfect, no problem. Let's look at EJ. So I called EJ this morning. You got to break and retest. If this counter closes, you might have a potential entry for a sale again. So all I would do is, once I see that it's sold, the reason I'm not taking the trade because the candle has not closed. So remember, guys, for Data and Kiki, this red candle has to be below. This is like a little gap. This may be from the 5 o'clock hour, but what price did it come back and close? This is the true last level of support right here. Price did, this was support. Price closed below. When we say close, guys, that means the candle is finished developing. Okay, it's no longer moving. It's solidified. It's stuck in that place. That thick part of the candle has to be below that last level of support. So price broke out, and retested. That was a perfect entry. And then you would be in profit right now, right? You'd be up 20 pips. So you can either wait for another, hopefully you can hope the price comes back here, but 98765. So this right here is a 5 o'clock hour. For those of you who don't know, between 5 and 6, the markets reset their spreads. They do swaps and all that kind of stuff. Long story short, that's when they're basically charging you for holding your trades overnight. All right. But it'd be so small, you don't even know it. Okay. So sometimes it can open up in a gap when price resets. So around 8 o'clock Eastern, I'll look at the markets again because a new session has started, a new trading session. I think it's the Tokyo, one of them. I can't remember. Don't hold me to it. I ain't gonna need a lot of y'all. All I know is London and New York at this point. But price, if this candle closes at 10 p.m. Eastern, if it stops, then I would probably call out a sell limit or execution. If the market retraces, come right here, I'll do a sell execution. If it hasn't retraced yet, I'll do a sell limit. Same thing I was trying to do for AUD Swiss. I was trying to catch this, see how, oh, this is such a beautiful, this is so beautiful. All right, DAEDAEKEYKEY. I mean, this thing ain't nothing but DAEDAEKEYKEY all the way down. All right, so date night, and then you got date night, and then you got date night, AKA date night is consolidation. You got date night. So I was like, AUD Swiss has retested every single date night the way that I teach it, right? So if I was to put a support line, I'm gonna put them at the last wick. So this is the wick entry. This would be a wick right here. And this would be the wick right here. So price, make it make sense for y'all. So right here, we had our consolidation, our date night. Let me zoom in. All right, so you had your first level of support, edge of the wick, but I always focus on the breakout. That candle has to close below the edge of the body. So date night, Day left the house, told Kiki the BDBs on the back of her neck looked like raisinets. So boom, Kiki, Day left the house because he's talking about Kiki, her kitchen. He came back, boom, this would have been a sniper entry. These are usually the ones y'all are taking when I send signals, okay? So boom, catch the position. But if you didn't catch the sniper, then guess what? Day came back again, hit the door and the doorbell. I call the doorbells the edge of the wicks, which is right here, okay? So boom, break, entry, right? Then it did it again right here. You got your support. And this one, let me move these blue boxes right quick. You got your support level, right? So we know that this area is the date night. They left the house. That candle broke right below it. It's not so significant, but it did it. All right. So candle broke below it. All right. That means it's time to get in the bag. So as soon as the next one opens, this candle turned green. I would have called out a sell execution and we would have caught the bag on it. Then this one came back as well and retested. Right. And so ultimately, guess what? Price. This is the edge of the wick. This is the edge of the body. And so price came below that and started retesting the edge of these wicks. And you had another entry right there as well. Bang, it came all the way back up there as well, almost to the edge of the door. Okay. So it came back to the entry zone. That would have been another entry. So it just had a repetition where it kept doing it over and over again. So well, why not the next time, right? So when we was taking AUD Swiss today, I was, hoping that it would give us another, why is this not give me another retest. So look, you got date night right here. They left the house and boom, hit the edge of the wicks and hit the door. So there was another entry, right? I entered this trade, but I was waiting for another setup to send it as a signal. This is Sunday. The market opened up as a gap. So I was waiting for the market to fill in. And when price broke out of there, I wanted to catch the sell execution. Now I'm an execution trader because as you guys can see, them sell limits don't always activate. All right. So I wanted to execute it, but price never came back and did what all the history has given us, as y'all can see, a pullback, which is like the green kind of pulling back. You can see more of a definitive pullback with the green candles on the chart, right? But it didn't do that on this move. It said, we out of here, right? sniper entry and took off. So that trade is gone. So you can actually delete that trade if y'all in the signals. Now, if it just happened to skyrocket all the way back up there, I'd be surprised if shoot all the way back up here, activate the trade and sell. All right. But let me see something. Yeah. I don't really see that happening. So, but yeah, it was simple. So anyway, what I was getting at was you got date night, Daddy left the house, back of the BBs on Kiki, back of her neck look like Raisinets. Price, Daddy left the house because she kicked him out because he was talking about a house, and he never came back that time, right? He knocked on the door. He rung the doorbell one time right here. Price went up. Daddy went up and rung the doorbell, but he never came back, all right? Because he knew he was in the doghouse, all right? So if I was looking at that trade right now, I would look left, and I would say, okay, do I have some sales on that level? Yes, I do. Price broke out. Wow, it repeated exactly what it did today that it did here. Price broke out. Actually, this did retest the wick, but we don't have a wick dropping that low over there. All right. I look some left, some more. If you look at the buys, price was tested on top of it, which is also another confirmation for me. But again, I'm looking for sales. So price sold. I just kind of go back until I see enough sales. It's not really, oh, I'm going back 6 months. Oh, I'm going back 12 months. I just do it look good enough to sell. Got a whole 2 trends right here, sales. You got another sale. Yeah, that's cool. Let's run it, right? And that's the decisions I make. And you call it a day. All right. Daily is selling 4 hours in a downtrend, and the 1 hour gave us a setup, but just the setup never came back for the entry. Okay. So that's how that works. So y'all can delete these trades if you're holding that position. Let's look at GA. This, like I said, this is one I was going to send out. It's a little bit more volatile, but let me see. Even right here, if I bring my last level of resistance would be right here. They left and broke and retested right here. This was the whole thing is consolidated, right? Typically I will box in from here to here. Let's move these red ones. All right, and price did just that. This date night, this is on Kiki's side. So Kiki and Daddy on the date night. All of this is consolidating. So when y'all see stuff sitting like this from left to right for so long, every single one of these candles represent an hour. I'm on what they call an hour time frame. So this has been sitting from April 7th for basically almost 2 days. It's set right here inside this box. So sometimes you'll be looking for trades and there's not an opportunity unless you want to sit there for a while, because you got to give the market time to create new momentum. That's what I shared in the chat today. Like, yeah, there's really nothing happening. Okay. You see how long it took for AU to hit take profit, right? And that's okay because I'm conditioned to it. It doesn't bother me at all because I know I'm allowing the money to come to me. But I know people who aren't that experienced, they're probably antsy on the edge of their seat. And it's like, it's doing what it's supposed to do, guys. My money goes to work. Everybody asks me, how long do I spend trading all day? I don't spend any time trading. How long does it, let me ask y'all a question. How long does it take you to copy and paste the signal? Somebody unmute your mic and let me know.
Like 30 seconds.
Somebody said 30 seconds. Now, let's put me and you in the same boat. I sent you the signal, you copy and paste the signal. It took me maybe a minute to type it. It took you 30 seconds to place it. What are you doing after you place the trade?
Letting it sit and just walk away and go. Do whatever else you about to do for the day.
So that is exactly my lifestyle. Once I send the trade, I'm doing exactly what you do. Ain't nothing else for us to do. I'll monitor it. I try to stay on top of it to let you guys know as soon as it hit target. But what else can we do when we've placed the trade?
Set it and forget it.
Right. We're going to sit there and just stare at the chart all day and grow gray hairs. Ain't nothing else to do. So that's when I tell people, when you learn this way of trading, there is no sitting there looking at trades all day. There's no stalking the computer. Like, we get our trade, and what I do is I'm in a space now where I'm trying to let a lot of people know about the app. So I'm marketing for 3 hours, and then after that, I'm studying music for the rest of the day. Trying to be like J Note on the phone, right? On the Zoom. So that's how it goes. So if this was the last level of resistance that you honored right here, because in real time, this would have been the last level. I want to assume this is Sunday because the market opened up in the gap. Last level of resistance, price. What? Kiki left the house and did what? Literally zoomed up out of here and came right back on top. So I would have told y'all to do a buy execution right here, right? Price left again. And then your next level of resistance would be on this level. Because if you look at it real time, this would be the last level of resistance. But I would honor this one as well because they're kind of within the same proximity, right? So those are things that you will kind of gather along the way. Those are crumbs that you'll pick up along the way. Stuff like that you can't just teach. I can't say, hey, when you see something like this, do a buy limit every time. No, it's just something you begin to feel. And that's why another part of my technique is called the instinct technique, because it's something you have to kind of get along with time. All right. So that would be your last level of resistance. Kiki leaves the house this time. All right. Once that candle closed, I have a setup. Boom. Hey, y'all, we're going to do a buy limit or a buy execution at the 75.15 or the 75.11. Boom. Trade activates right away, or we execute right away. And then within 3 candles, we're up, 60, 50 pips. And guess what? We already cleared the bad. This is news right here. This is a news wick, all right, or institutional trade, all right? So boom, price comes down. But even if this came all the way back down here, it didn't hit your stop loss, all right? It didn't hit your stop loss. So, and then you go on with it. So now you look at here, boom, boom. What do I have? I technically have a setup. I would do a buy execution right now, right? I would prefer a buy limit because I want to be as close to, because of the spread, I want to be as close to the entry. So I would prefer to be right here, at least at the 62, because this is at 68. I would prefer to be, 65, I would prefer to be at the 62 level. So I would do either a buy limit, or I just go ahead and buy execute it, call it a day, and just suck up the fact that I have a little bit of drawdown and keep it moving. But before I execute the trade, I do this. I go to the daily. It's literally what I teach, guys. Go to the daily. So I see that the daily is moving up, right? I go to the left and compare it. Do y'all see some bullish markets in the past? Yes or no? Where the blue level is. I can't see the chat box, by the way.
Yes.
Right. So boom, buy. Oh yeah, I'm buying that. I'm buying that. All right. So I go to the 4-hour frame. And then another thing is this, because price has closed above these previous levels here, that would be another confirmation, because technically price could come here because it came here and sold. It came here and sold. It could come here and sell again. So that may be something that may be a level of risk you don't want to take. That stuff I won't send out. Like, well, they might be scared because they see a level of resistance to the left a little bit. I ain't going to do that to them, right? But I'll get in the trade, right, personally in my own account. So boom. And then sometimes I'll send out trades and say, hey, guys, this is a medium risk, meaning this is what I've seen. Look at that. It's sold since March 25th. So you also have actually the highest candle closed right for these 3 levels, 67. Oh, yeah. Price closed above 67 level. And this is my Data and Kiki setup. Kiki closed above that 67 level, which is a reversal level, and it's retesting. Oh yeah, I'm about to execute. So all I do is boom. And I set my stop loss call of the day. All right. 66. That would put me, what's that? 66 minus 36. I like it. All right. 30 pips stop loss. That means I lose $300 if I lose the trade. Call it a day. All right. And that's it. All right. So yeah, now if y'all go buy execute, don't blame me if you lose it, because remember, it's my level of risk tolerance. Why? Because I am willing to risk it. And I see that these levels sold, even though the majority of my confirmations tell me buy from March 29th, March 31st, it wanted to turn around and sell. But because this green candle closed above that sales on, I'm running with it. Price is retesting because this is my typical setup. I got date night. Kiki left the house. Kiki is knocking on the door because she told Day the back of his ankles look like Amistad. So boom, Kiki roasting Day. Day told her to leave the house. She's knocking, she's ringing the door. Worst case scenario, I'm out $300. That is something that I know. What is $300 compared to my portfolio? Absolutely nothing. But you have to make sure you know that when you place trades. I can do the math real quick. Are you willing to take that risk? If you don't want to do $1 standard, whatever, lower your risk. Because one thing about me is I'll place 10 cent positions if I have maxed out my positions for the day, right? If I can't go put no bigger lots on, I'll do a smaller lot just to keep my confidence built. All right. I what I do a lot of times is confidence builders, right? Confidence builders, right? So some of them are closed out. Some of them, we look for, got in 10 cents. Here it is. AUD Swiss. This was a confidence builder. All right. That little trade was a confidence, but I didn't put a bigger lot on that one. So you guys have to understand your risk management. You can trade and do all the things you want to do, but it's ultimately your risk management. And in this particular technique, it's just breaks and retests. I mean, it's the easiest thing on the planet. I don't even know why they set it up that way. Like I tell people all the time, trading is so easy, and I don't think people believe me, but it's easy. You know what I'm saying? Once you see the rhythm, once you see the repetition, it's like, I guess looking at this sheet music right now, I see the same pattern over and over. Mind you, I didn't know how to read sheet music before trading, by the way, right? So understand that it's just the same rhythms. You got the hook, you're going to hit a hook again, and you're going to hit a hook at the end. It's the same repetition. It's not something that I created, guys. It was something that I was able to identify, that there's a certain drop, consolidation, drop, consolidation, drop, consolidation. I said, dang, that's all it is. And after that, it's just risk management, risk to reward, and emotional intelligence. And that's the bigger class. You can lose 3 trades, and in the fourth one, you can lose 2%, 2%, 2%, and your fourth trade can go 8%. It doesn't matter. And that's when probability starts to not really play a huge role, because thank God I have a great probability. But for those who don't understand probability, they don't understand risk to reward. They feel like they're losing. But I'm an intraday swing trader, so I hold positions longer. I'm catching 300, 400 pips on trades, 3,000 pips on indices, right? So when you understand, I could lose 5 trades in a row, but I can win that last one and hold it, and it surpasses all my losses. That's why you have to understand risk to reward, because your one win can surpass your four losses. If you understand risk to reward. If you're catching 10 pip and dip and 20 pip and dip, sometimes it can hurt you depending on who you're taking trades from, because again, my trades do pretty decent, right? And because they do pretty decent, for those who are doing 10, 20 pips, it's working out in your favor. But if we're 60, 50%, you'll be hurting. You're like, man, she can't trade. But really, it's risk reward. You know what I'm saying? So did that make sense to you guys? Let me see what y'all don't drop in here. I can't see the chat. Yeah, you can delete AUD Swiss. I take it from there. Okay. When retesting, do you wait until the candle is done, or do you just go in with the buy or sell as soon as it retests? Okay, wait a minute. I have to read that again. I'm gonna come back to consistency. Is key. Consistency key. The second question is, do you have a favorite pair? No. The person who asked me, do I have a favorite pair? Can you please come to line? I want to have a conversation with you. Yes, delete AUD Swiss from earlier today. It's what I just taught. D 4 hour and 1 hour. I might do 15 minutes on indices or cryptos, but it's not a part of my confirmations. Well, my iPhone person asked me about a favorite pair. What did I do that? How do you notice fake outs? What if you have a DAEDAEKEYKEY for about? What is a fake out? What's my iPhone person? I need a person to ask me about fake outs and my favorite pair. Please come to the line and talk to me. Holla at me. There you go. Are they there? Or you can just tap in the chat box. I'm here. You ain't even got to come to the mic if you shout. Talk to me though. I just kind of just told you the answer though. They done left the line. Well, I'm gonna answer it for the person who just want to know in general. So when it comes to favorite pairs, I don't believe in favorite pairs. I believe in favorites. I believe in my favorite confirmation. Does that make sense? If you notice, okay, let me show you how I trade. When my alarm go off at 8:40 in the morning to look at the markets at 9 a.m., that's it, structure and confirmations. I am literally doing this. Matter of fact, this is a setup right here. If AU, that's a setup. You can literally sell limit at 138. If it cut now, if you see how the market jumped up, boom, I would sell execute. I ain't even do no, I'm already over my thing. Boom, that's exactly how I trade. Then I come over here and I type out the signal. Literally right here, I type out all this stuff for y'all and I have to copy and paste it over. All right. So I'm hoping the market stays exactly right here as I'm typing. Just stay right there. Just stay right there. And I look at, okay, it says 74,161. I was trying to send out a trade this morning. That thing took all the way up. I didn't even get to send it. It was euro pound. Boom. You see how it's doing? So I will be over there in my app typing it up. 74. Now price done moved 2 pips. So I got to change my numbers. Right? It was at 74.16. Now I got to change my numbers around. Right? So, okay, back says 74.16. Anyway, by the time I finish typing it, I go over there. I paste it over and notify everybody we in the back. I would prefer it come to this highest level. 74,171. Right? So that's it. Boom. That was a trade right there. I've already confirmed AUD USD 50 million times. I already know the confirmation is already there. I don't have to do a top-down analysis again. EU, possible setup if it comes back and retests this level, right? So I have to go back. I have to look left. Nope, not doing it. Not selling it because guess what? I got this sell right here where price turned around and went to a buy. And it's a lot of buys. So it's a lot of bullish activity on that level. It's in a downtrend, but because it's in a bullish zone, this is like a 50-50 possibility that this will sell. I'm not going to send it. All right, go to GU, no setup. Go to NZD USD, possible setup. Boom. Look left, daily. Let's move this out the way. I'm not going to send it out because the first thing I see is that it sold here and went back bullish. So even though I got some sales on this level since December, it's like 50-50, right? So if I send it, I'll send it as like a medium risk or a higher risk, right? Price is trying to pull back right now. So if I sell it, I'll let them know like, hey, y'all, this is a high risk entry, all right? If I do it, I'll do a 10-cent lot size for confidence builder, right? Keep it moving. USD CAD. USDK is out the building right now. If you try to catch this position, you have to try to catch a buy limit and hope that price would would come back down as a red candle and then go back up, just like it did right here. Went up, came down, went up. All right. So I will look left. It's a lot of sales and buys on this level, but this uptrend is super strong. All right. 4 hour trending up. In comparison to the left, we got a lot of bullish activity. I'll do it. I'll do a buy limit for a buy right there. All right. And sometimes I just do my little arrow like this. This is like when I run out of lots to place, I put an arrow right there that lets me know that this was my entry. Confidence builder, right? USD Swiss. This will be the last date night here. Then the question I would ask myself is, why is price stopping right here? And I will look left. Oh, yeah. I will sell this one in a heartbeat. Oh, yeah. Wait a minute. Sell. Yeah, I would definitely sell this. The only thing, though, is when it sold here, it kind of went back up and went back up. But, again, that's what I call maybe like a 70-30 risk. So it has like maybe a 70, look, price selling already. All right. So I would definitely sell that. And because I'm not placing any more positions, I'll just put my little arrow right here and tell me that I predicted that it would sell from this little moment. All right. So this is a little confidence builder. And when I come across it tomorrow or something, I'll just smile and be like, yay, I got it right in my mind. Right. USD JPY. Ain't nothing happening right now. I think it's at a reversal level. Let me check. Yep. Ooh. UJ is at its peak. 2014 high. That's the last time it was this high in 2014. I would take it because I love catching peaks and it's a high risk for me. So I would put I would put a standard. I'd probably close a position and put a standard there and risk it and no more than 30 pips, and that would put me at a $300 loss, right? AUD CAD, choppy. Y'all see all that consolidation sitting here, but you still have a possible setup, because if you look left, this was date night. This was the counter that broke out. They left the house, and he's be dancing inside the entry zone for 2 days, right? So I would look left. The reason I wouldn't take it, because it sits too idle for too long. Okay. That's another thing I look at. I look at how long some of these pairs consolidate. Look at all that consolidation. It just sits left to right. I mean, it's sat here for like 3 weeks. Okay. I don't want to send a signal on y'all sitting in it for 3 weeks. All right. So AD Swiss is there. So do you get it? You know, just looking for setups. Right. Definitely a good sell level for this one. You look left. All right, a 1 hour frame, got some sales. But I go to the daily, look left. All right, so what happened here? What year is this? 2015. Last time it sold and was that high was 2015. Go to the 4 hour. Is it in a downtrend? A little bit. All right, a little bit. And then go to the 1 hour. So if you want to sell it, you can. I would do a sell right there where it's at. You see how it's at the entry zone? Whoever asked me about, somebody asked me about a counter closing or something. It's at the entry zone. Just sell, execute. CAD Swiss. Oh man, I want to send y'all this one today. Oh, this was the one that left, and I didn't get to CAD Swiss and AUD Swiss never retest. They just got the heck on. All right, this is the one I wanted to send y'all this morning. And clearly that sale limit is still sitting there. Let me delete that. But this is what I wanted to send this morning. It was gone. So sometimes, guys, I'm getting ready to send y'all trades and the market say, bye-bye. All right, this was a perfect setup right here. CAD JPY. Is there a wick on this thing? Barely. So you got your support at the neck, support at the wick. Both are called the zone. Date night, day they left the house, literally smacked dead on both of them, both of those levels, and took off, right? If I want to do a comparison and look left, oh yeah. Sold in the past, it hadn't been that high since 2015. The 4 hours in a downtrend and the 1 hour. So the next thing I would have to do is, I don't really have a support level here. So just kind of making me up one. I will hope that this is the support level. So I will hope that price would, ooh, look at that right there. Ooh, sell. Heck yeah, I'm keeping that level. So I would do a sell limit at this zone, at the 164, call it a day. All right. Or just throw my little arrow right here. Sell limit on this level. All right. So does that make sense, guys?
Yes.
I'm sorry, I'm moving too fast. Euro odd is consolidating. Ain't nothing much going on. I'm not with it. Moving on. Euro CAD. So there we go. Somebody asked me about a favorite pair. There is no such thing in my world as a favorite pair. It's only a favorite setup. It's you got my breakout calendar, my daily 4 hour match. We in the bag. Notice how I'm going through each pair, but I'm not looking at the pair. I'm looking at the structure. All right. I don't even care about the pair until I see that the setup is there, right? So Euro odd, we traded Euro odd. We traded this whole movement right here from March 31st all the way to April 5th. Then price started getting all janky. It ain't moving like it was, all right? I don't have a setup. It's no longer my concern anymore, right? Euro CAD gave me a setup this morning too. This was a setup. You can see my wick still sitting here, all right? But it hasn't moved too much. I mean, it has moved maybe 30 pips, but 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. It's been sitting in the same area for 13 hours, okay? You have a possible new entry going on right here. All right, then I would just look left, daily. Yep, definitely would buy this. This is uptrend on the daily, uptrend on the 4 hour, retesting. And it's in my entry zone. I have the edge of the body. I have the edge of the wick. It's in my entry zone. Kiki is in the entry zone. I would just buy, execute. All right. But I'm out of position, so we're just gonna do this. I know what my stop loss would be. So yeah, keep it moving. I put them same lines right here, as y'all saw when we opened up the pair. All right, and it could have been right here as well. You got DAEDAEKEYKEY right here, entry, and a possible entry. All right. So date night, Kiki left the house right here. She broke above the pink level. The candle has to break above the neck of the body resistance, not the wick. All right, this is my confirmation. The candle has to close above the neck of the body resistance level. Once that candle closes above the pink line, I'm looking for an entry. Price is dead in my space of my entry zone. Y'all are looking at color. I'm not looking at color. I'm looking at structure. Every single candle that has a wick on it used to be the opposite color. This candle may be red right now, then turn around and go green. Or it can close and sit right here, and the next candle can open up, maybe go red a little bit, and then turn around and go green. All right. So boom, I'll see what happens with EuroCAD. Euro Swiss. So this is just how I scan in the mornings, guys. All right. Euro pound. I think nothing going on. Euro pound is me hedging Euro pound, and I want to do what I want to do. EJ. Oh, beautiful setup. Oh, we just talked about EJ, didn't we? So EJ will do a sell limit at the 138 level. All right, get my confidence builder right here. If it doesn't come back and do a sell limit, at least I predicted a sell. Because price could just tank and just go do a continuation. So yeah, I mean that's the whole idea, guys. Just go through looking for confirmations, looking for setups. If it's there, I take it. If it's not, keep it moving, right? You don't have to trade every pair, but if you want to, for confidence builders, you can. You put them in your demo, all right? But does that make sense, guys? Anybody else have any questions? I was making entries. All right. So literally 9 a.m., you know, for those who on the Signals app, I scan the markets at 9 a.m. every morning. I've been doing it since 2019. All right. 9 a.m. is my first hour to wake up and scan the markets. Then I'll try to look again, depending on how that 9 a.m. trade did. I'll look again around maybe 12:01. Then I don't do too much close to that 5 p.m. hour because that's when you get close to the spreads. Your trades, you will see your trades go into a higher profit or go into a higher loss around 5 p.m. Because remember, that's when a swap is happening and basically things are being reset. So if your trade was $1, maybe you were $10 in profit and then it goes down to $2 in profit because the spread widened. That red and blue line has shifted apart. And so it's showing you out of profit. Really, you're in profit, but because the spread has widened, that means the broker fee has expanded for a certain period of time until it shrinks back and get closer again. And then you'll see yourself go back into profit. I don't know what the word fake out means. That's why I keep asking about this fake out. What is a fake out? Maybe your terminology is different.
I know what they're talking about if you want me to answer that.
Yes, that's fine.
So basically, you know how you wait for the candle to close above or below whatever line that you draw. The fake out is like, let's say that you're looking for a sell and then you have a candle close below the line. So then you hop in the trade, but then it buys all the way back up. So it basically like fakes you out, you know?
I don't really call it fake out. You got market movers, you got supply and demand, you got institutional trading. I don't really categorize it as a fake out. I just believe that's just what the market got news. Anything can happen. So I wouldn't really categorize it as a fake out. I'll just say you can't win everything. That's what I would say. And it doesn't matter. It's called a stop loss. Most people, I have a huge level of gratification for stop losses. And like I said, I understand risk to reward, understanding what I'm willing to lose. So as you guys saw me execute those positions, oh, okay, I'm gonna lose $300. My max is 1,000. My max is 2,000, right? So once I hit that limit, I'm not emotionally attached to a win or loss. It's exciting because I want y'all to make a bag, right? But I have so much gratification understanding risk management because I've been able to protect ever since August 2019, I've been able to start protecting my accounts at a greater level because I have more of a gratification for stop losses. So you just got to be prepared for it. Don't prepare to win, prepare to secure your capital. How about that? Don't get emotionally attached to a win. Get emotionally attached to protecting your capital. Yeah, so I can't say 20 pips stop loss always. It's percentages. It's percentages. So remember, everything you do in trading is not pip. I don't trade pips. I trade percentages. So how can I explain it with stop loss? So let's say somebody got $1,000 account and they have to choose what's their risk tolerance. Are you willing to risk 1, 2, 3, 4, 5% of your account? So if it's $1,000 and you say, okay, well, I don't want to risk no more than 1% of my account, right? So that would be $10. So for your trades, you're saying once I hit $10, that's my risk. That's my risk for that particular trade, that position. So, or maybe you're doing 1% a day. I don't know. So now you have to decide, what are you converting? If you do a 20 pip stop loss, right? What lot size can you place? Doing a 20 pip stop loss that will take you out of $10. It take you out of $10. So if I'm losing $10, I divide it by 20. That means my 20 pips. That's going to give me my lot size. That's a 50-cent lot size. So if I'm doing 50 cents times 20 pips, that means I am losing $10. If I want to shrink that, say, well, shoot, maybe I want to do 30 pips stop loss. Remember, my max loss is going to be $10. So I divide this $10 by a 30 pip stop loss by 30. That gives me 33 cents. That means my lot size should be 30 cents. 0.03 times 30 equals $9. Does that make sense? Perfect. So I tell people all the time, I can send you 6 trades and win, and we can win all of them, but you can still blow your account. I'm like, what? You can take a trade and still blow your account because we can win 4 trades in a row. That 5th trade, you don't want to up your lot size and just get all crazy and cuckoo. Just because you up your lot size doesn't even mean your account can handle what you did. All right? Because it's called margin. It's called margin call, right? You got $1,000 account, you put a standard in it. Lord have mercy, I'm praying for you. You put a $10 lot size in, right? And will that account go backwards 20, 30 pips, you're already down $200 to $300, right? And if you do higher than that, your account about to be wiped out. Maybe you did a double standard, or maybe you did 2 trades on I don't know, maybe just going crazy that day. The broker gonna say, listen, once you start reaching a certain, because what happens, guys, when you place trades, there's called free margin to margin, not to get too nerdy. Basically, a certain portion of your capital is considered a deposit, okay? It's like where your free margin is. It's considered a deposit. And then the other portion of it is what the broker is saying, okay, in exchange for this deposit, I'm going to give you some more money to play with. You give me $100, I give you $500, all right? But you're going to get swiped out of here when you start reaching your $100 little deposit. Once that starts getting pressure on it, oh no, we're finna pull you out of all these trades. So technically you're trying to trade something that you really don't have. All right. So they'll give you more money to play with so you can place bigger positions, but technically it ain't all that ain't your money because they're gonna pull you out on the margin call. All right. So it doesn't matter if you have a high, I'm talking from experience on that. If your lot size is so huge it makes the account suffocate, they're gonna pull you out of that trade. All right. So get a trading proprietary firm account that'll get your risk management in order, or compound. All right. But for instance, I had a guy grow his account 5% last week, Mr. Clive. If he grows his account 5% again, if he was with a pro firm that I'm with, he'll be able to double his account already. If he had a $10,000 account, $5,000 account, he grew his account 10% in 2 weeks, they'll take him over to a $20,000 account. All right. So now he can shift his lot size just a little bit, but not too much because it can't go past 5%, or they suspend the account. So it's just those little things you got to keep in mind. Now, for those of you who've been with my app since February, you know I got my butt whipped in February. But I'm not emotionally attached to the market. So most people probably were suffocating in the month of February because that's when the war started. The euro was tanking. The euro was just going insane. So anything I was sent out was getting slapped by news every single second. But we stayed the course. I stayed the course. I wasn't worried about it because that was the first time ever I dealt with trading in the middle of a war. But after the war pretty much started kind of coming down a little bit and trying to come to some agreements, the markets are doing what they always do. Repetition. Humans are creatures of habit, guys. The same news comes out. You can go to Forex Factory. You can go to my FX book. You can go to Reuters. They send out the same news every month, every year for 10 years. Same news. So you get to understand how the news affects the market. Just because you get red folders doesn't mean it's going to make the market sell. It could be good news. It can make that particular pair go bullish, right? So it's other little things like that you have to know along the way, but that's why you got to give trading time. Trading is not, I'm gonna learn it in 90 days. It's an activity. It's a skill set that requires activity, right? When you go out there and fix cars, you can go to school for being a mechanic, but there's going to be some things you're going to learn along the way just from being and participating in that particular career, right? So everything can't be taught. A lot of these things have to be caught along the way. And I tell people to stay in trading at least 2 years, 2 to 4 years, just that learning mode, stay in a complete learning mode, because you're going to learn that you're going to see the patterns, you're going to see the repetition, you're going to see that same news is coming out year to year. So you got to give yourself years of experience to start seeing the duplication, the redundancy in the markets. You're like, okay, yes, that's why I'm not afraid of the news. Like, I don't care about the news because it's just been not doing a lot for the past 4 years, right? Besides February, but that wasn't scheduled news. February was world news. That was stuff that was completely out of our control, right? So those are things you have to be aware of. So I learned a lesson, right? Don't trade during a war. So, but outside of that, everything is pretty much redundant, guys. So again, you got to give yourself time. Don't treat this like a quick get rich scheme. Even if you get a prop firm account, guys, it's still going to take time. So I'll tell people, if you want to prepare for leveraging this as your lifestyle, my best advice to you, if you want to go trading full time, you need to have 6 to 12 months of your lifestyle, your cost of living saved up. You need to have another source of income, because you can have a $17,000 day, and then you can have a $3,000 day, or you can have a $700 day, and you can have a $100 day. It fluctuates. All right. You can't say I'm going to make this every single day. It doesn't work like that. All right. Get your account big enough to where you're at least making 2 to 4 times your cost of living on a month-to-month basis. Have 6 to 12 months of your cost of living saved up. Make sure you see enough consistency for at least 6 months of your profits that you understand what you're doing. Or you could just use it as a side hustle, or way just make some extra capital or cash. Ultimately, my goal with trading is not something I particularly want to just live off of. It's a source of capital for investing into passive streams of income. So any profits, so my goal is to scale my account to 7 figures this year, and take all that money and put it into crypto, staking, stock dividends, and real estate, things that pay me where I don't have to think at all, which is what I call mindless wealth. So for instance, I'm with Celsius. It's a crypto app, and they pay me rewards every single week. And just that's the next level where, you got a property, or hell, I don't even say real estate, but there's different things where you don't even have to be mentally and physically involved anymore, but you're still collecting a check. So you want to get yourself in that space where you put in your capital into things that make money, and you don't ever have to, it don't even have to be in your brain that is making money for you. You just get that check every month or every year. All right. So that's just a little nugget for you guys. But listen, get your active income up, put it in passive income, and let's get the bag. All right. Does anybody have any last minute questions, concerns, testimonials, ideas, or feedback? This all was popping with you. My eyes getting low. I guess I'm getting sleepy. Y'all done worked me today. Anybody got any questions, concerns, testimonials, ideas, or feedback? Let me know.
Oh yeah. I sent you a message, BB. I guess you didn't see it, but Shout out to you, because I did double my account.
Let's go!
So yeah, I'm working on learning DAEDAEKEYKEY for real. So
you gotta say that. Give it what you say, Shay. Give it to me one more time.
I said shout out to you, BB and DAEDAE and Kiki, because I doubled my account.
Let's go. Y'all drop some love in the chat box for Miss Shay, man. Doubling her account. You're so welcome, man. It's just having fun because I realized trading is boring. I'm just doing it by myself, and I wanted to keep that thing going. So let's get it, y'all.
I can't wait till it get boring for me. You like, this boring, it's easy. I need to learn this. I'm like, shut up, BB.
Well, it's fun because that energy you just gave me, I can't have that energy by myself. You know what I'm saying? So that's what I like to hear, is that everybody is growing. Even if we have a lesson, right, that somebody learned, oh, I didn't check the news, or oh, that's what it means with risk to reward. So just trying to give some value any kind of way, whether we're winning or have a lesson that day. So man, congratulations. Double your pleasure, double your fun. So crazy. All right, yo, let's get it, y'all. DDKK Academy is coming soon. Y'all just pray, just bear with me. I promise that thing is coming. I just got to figure out other little technical and homework and all that stuff. DDKK Academy is coming. Just put that on fully automation. And then, and I guess I got to do a masterclass since y'all done bullet me to do a masterclass. So end of June, y'all, let's do a masterclass end of June. So everybody can get their money stacked up in a secure slot. Only 20 students, that's all I'm taking. But y'all have a blessed Monday night. I'll see y'all next Monday. Jot your questions down along the way throughout the week and bring them back next Monday. Who you use for crypto? I use some of everybody. But next Monday, I'm gonna stop the call and answer your question. I will drop this call.